Hi, my name is Darren Joseph from HEJ.tax. We're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having a conversation with the world expert on information sharing agreements, Mark. Mark, would you please introduce yourself to those who don't already know you?
Yeah, so I have been specializing in automatic exchange of information and exchange on demand for 20 years, and I've consulted with the EU Commission and the OECD, and I focus exclusively on automatic exchange of information. I don't do anything else.
Okay, that's great. So the first question, Mark, what is the major flaw in CRS and FATCA, in your opinion?
Okay, so this interview is about flaws. We're going to focus on FATCA because we've done CRS
Okay.
many times.
Yeah.
Okay. But the flaw is more or less the same, but CRS and FATCA try to tackle the flaws in different ways. So we'll be looking at FATCA a lot more in this set of interviews. So the major flaw in CRS, and I've never really understood why they allowed
Mhm.
this, is that financial automatic exchange of information, they deputize the financial institutions to report on clients that live in another country, that are tax resident in another country from the financial institution. However, financial institutions do not report on account holders that are also financial institutions. Remember, they
Mhm.
can be private financial institutions that the client has set up. So this allows a chain of entities with each level being a financial institution. The weakness is when the top level financial institution, the one that's supposed to finally report on behalf of all the other financial institution, is a non-participating financial institution. FATCA and CRS weakly attempt to counter this weakness, leaving opportunities to set up structures that are not reportable at all.
When you say non-participating financial institution, does that mean that it's a financial institution in a non-participating jurisdiction?
There's two types of non-participating
Okay.
financial institutions. One is where the financial institution is located in
Okay.
a jurisdiction that is not a signatory or participating.
Mhm.
And for FATCA, that doesn't exist. For FATCA, it's when the financial institution has not registered for GIN and won't be reporting. So
Mm.
you'll see that FATCA tries to tackle that with penalties. Not always successful. Okay.
Okay. Thank you. Mark, thank you very much for sharing your time, your expertise. If someone wanted to reach out to you directly to find out more, what's the best way to find you and contact you?
You can just find my website, which is co-ownershiptrust.com. That's with a dash. Uh,
Mhm.
or a or a Google search of my name and trust, and you should find me very quickly. And then WhatsApp me.